we have air conditioning. Life is good. Welcome. This event is sponsored by NFFV, Nebraskans for Founders Values. And one of those values was their deeply held faith. And we would like to start this event with prayer. Pastor Franklin Krause is going to lead us. He's the head pastor at Ebenezer Congregational Church here in Lincoln.
Only head pastor, but only staff member. You only have one parking space, and I'm not old enough to use it yet. Come see us park on the street. Let's pray. Almighty Father, we are grateful for your presence here, for your presence in our lives. Father, we're grateful that there's people who are willing to stand for what is right and good, what is wholesome and healthy, and what is godly. You know, Father, that all those things are within the character of our Lord Jesus. Scripture has told us, and he has taught us, that not a sparrow falls to the ground in our world without his notice and without his care. And so, Father, nothing significant is going to happen in Nebraska and Lincoln in our lives unless the Lord is helping with it. So thank you for these people who stand in the gap, who are willing to invest their lives in issues that matter to all of us. Father, we pray that you would bless them, guide them, give them wisdom, help them to walk in righteousness. And Father, you know, we always pray that we might see what your hand can accomplish through us in the days ahead. Bless our time together today. In Christ's name we pray.
Amen. Very good. And if you'll stand, I have the Pledge of Allegiance led by Mark Freehoff, who's a legislative aide to Senator Clements and is a member of the National Guard, I believe.
Please join me in the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. All right. Before we begin, there are some thank yous that are in order. First of all, we'd like to thank the staff of the East Campus Student Union here at UNL for their help and cooperation. And
it's not on.
Okay.
I'll try that.
I'll shout louder. Is that better? Okay. And secondly, we thank Turning Point USA. The campus chapter has arranged for the room and helped us to reserve that to get this. And if you know anything about their history, they have gone through some adversity and opposition becoming established. And so we are certainly grateful for Turning Point USA and the UNL campus group. So today is actually a sequel to an event that we had on May 3rd. If you remember, we sponsored an open public forum on the EPIC option, which is one of the options to give Nebraska tax relief. Depending on news numbers that you read, we're possibly the fourth most heavily taxed state in the union. And the EPIC option is certainly one of the options to address that. Today, we're going to broaden the scope of what we're doing. But one of the things that you need to understand, that we'd like to have you understand about NFFB, is we are naive enough to believe that our founders were serious about what they said. That they truly believed that we should have the God-given liberty to live our lives, that all human life has full value, and that every man should be free to enjoy the things that the Lord has given. So in that vein, one of our missions is to try to help Nebraskans become involved in that process. As you know, without reins and a pretty stiff bridle, government tends to go its own way. And without the people being involved, that's even more likely to happen. So our purpose as NFFB, Nebraskans for Founders Values, is to equip people with the information that they need to become involved and we also want to give them the ability to make a difference in their own government. So with that, we would like to introduce today's session. Today's speaker is Dan Pilla. How many of you have heard of Dan over time? Quite a few. I've heard about him on Christian radio for years. And Dan is not only an expert, obviously he's an attorney, but he has a very interesting resume. Because one of the issues is, if we're going to sit under good government, that good government has to be restrained, because it fully has the ability to take what we have and use it for its purpose. So the question now, we discussed EPIC and how might we remedy this, but now the question is, what really is just and fair taxation all about? And that's why we've asked Dan to come today. We've invited him to answer those questions. At the end of the presentation, we will have an opportunity for Q&A. And if you'll raise your hand, we do have cards that you can fill out. We'll take questions basically first come, first serve. But as Dan speaks, we'll ask you to fill out a card, forward your question, and we will take as many of those as we can. He has a fairly hard cutoff at 3:45 to be able to make an airplane, but we will get to and address as many of those as possible. Dan Pilla understands just taxation. He's not just a tax attorney. His credentials include he is a tax litigation consultant and U.S. tax court practitioner. He is widely recognized as the nation's leading expert in IRS procedures and taxpayers' rights. He has over 40 years of experience dealing with the IRS at all levels. I'm glad it's him. Dan is also an enrolled agent and a tax litigation consultant. He's authorized to practice before the United States Tax Court. In fact, he was actually ahead of his time because he formed in 1993 the Taxpayers Defense Institute, where he continues to lead as executive director. Dan has written more than 15 books on dealing with the IRS, and he works with clients throughout the United States. His experience and expertise come down to his one simple model, and you'll like this. There's no such thing as a hopeless tax problem. So in Nebraska, there is hope. But it's up to us if we're going to carry the torch. So with that, I'd like to introduce Dan Pilla, today's speaker. Thank you. All right, thank you for that. I appreciate that.
Thank you for that. And I want to thank you, Nebraskans, for bringing me in here. This is not my first time in Nebraska. This is not my first time working with the EPIC folks. I had the pleasure of testifying before the Senate Revenue Committee, I think 2 years ago, right? Was it 2 years ago? On the EPIC option, and talked specifically about the need for fundamental tax change. I don't like to use the word reform. Reform has bounced around too much and it means next to nothing. We've been seeing tax reform at the federal level over and over and over again for as long as I've been paying attention. And the comment was that I've been doing this for 40 years. Well, it's north of 45 years now that I've been involved in tax litigation. I've seen every kind of tax case you can imagine, and I've seen a few that you can't imagine. I've dealt with individuals and businesses in every kind of tax dispute that you can imagine at the federal level. Businesses and individuals, I've represented businesses all across the United States before the IRS and the United States Tax Court, and I've seen the results of poor tax policy. You know, it's one thing to read about tax policy. It's another thing to see the results of bad policy. I remember years and years ago, I wrote a book in 1993 called How to Fire the IRS. And that book was released in about, I don't know, early 1993, late 1992. That book started the debate on whether we should abolish the current income tax system at the federal level and go to a national retail sales tax. I made the argument that we ought to adopt a national retail sales tax in place of the federal income tax. Well, the tax administration was so bad in the 1990s, by the middle 1990s, that the issue was no longer a question of whether we should get rid of the income tax. The question is what should be a suitable replacement. And that started the flat tax sales tax debate. And we made the flat tax sales tax debate all across the United States. And I found myself in Washington, D.C. on more than one occasion in Capitol hearing rooms and in Senate hearings and just House hearings on tax policy reform. And I remember vividly one tax policy forum that we had in Washington, D.C., a room like this, quite a bit bigger than this, that was sponsored by the Cato Institute. And they had all these hoity-toity people talking there about this and that and all these ivory tower folks. And I made the claim then, and I stand by it today, that I was the only one in the room qualified to talk about what happens under bad tax systems. Because I see it every day in my work. I see people bleeding from the ears financially as a result of problems they have trying to stay current with the income tax. I see businesses ground into powder by the IRS and state tax administrators because of the compliance burdens that these businesses have put on them by these various agencies. The Government Accountability Office, the GAO, once did a study in the early 2000s, 2001, 2002, somewhere in there, about the individual burdens that are placed on businesses. I'll get into this a little bit more as we progress here. And the General Accounting, the Government Accountability Office, the GAO, identified as many as 200 different specific affirmative duties that are placed on businesses and individual taxpayers when it comes to tax compliance. 200 of them. How many of you in this room can name 20 specific things you have to do to stay current? Most people can't name 5. And yet here we have this Internal Revenue Code that lays all these burdens on people that create problems that generally blindside folks. People generally learn about the nuances of the tax code after they've gone through a tax audit and have themselves pounded by the IRS or a state taxing agency as a result of some rule that they missed that they had no idea they were obligated to follow. So the question is, what do we do about that? The answer is we've got to abolish the income tax. We've got to abolish the Internal Revenue Service. When I say the income tax, I'm talking about federal and state income taxes. And we got to adopt in its place a tax system that meets the elements of sound tax policy. Now, the question is, what is sound tax policy? What is going on in the United States today, federal and state levels, is people don't understand what constitutes sound tax policy. They don't understand what the purpose of taxation is. They don't understand what the states and federal government are supposed to be doing with the tax revenues they collect. So this is what I want to drill into, is what is sound tax policy? What does it look like? And I identified 10 things. I wrote a paper for the Heartland Institute, a well-regarded think tank in Chicago area in early 2000s, 2004, 2005, called The 10 Principles of Federal Tax Policy. All right, and that paper is still available. It's on my website at taxhelponline.com. That's taxhelponline.com. You can go there. You can go to Taxpayer Help. There's a drop-down menu that takes you to special reports, and one of the reports is the 10 Principles paper. And I identified the 10 things that have to be on the table when we talk about tax policy and tax quote-unquote reform. All right, if we're not working in the context of these 10 principles, you're just simply missing the boat. And whatever you do isn't going to fix the problem. So let's drill into the 10 principles and let's talk about what they look like. Principle number 1 is simplicity. People have a right to know what the tax laws are and what their obligations are under those laws. They have a right to know what they have to do to comply. Simplicity is a key. You know, every single year in 1997, Congress passed and the president signed the IRS Restructuring and Reform Act. I was actually a consultant to the National Commission on Restructuring the IRS. I made 33 different specific recommendations to the commission on how to reform the Internal Revenue Code to level the playing field between the IRS and taxpayers in the enforcement area. And a lot of these recommendations were adopted into law. So I had a real direct hand in structuring the reform that took place during that period of time. One of the things that came out of that was an obligation for the National Taxpayer Advocate to report to Congress the 20 most common problems that individuals and businesses have complying with the tax code. What are the 20 most serious problems that people have? And the taxpayer advocate identified tax law complexity as the number one problem that citizens have. And the taxpayer advocate identified tax law complexity as the number one problem for about 15 years in a row. And I remember very vividly when she stopped adding tax law complexity as one of the problems in her report. And she said, Congress isn't doing anything to fix it. So why should I keep talking about this over and over and over again when Congress isn't doing anything to fix it? Another thing that came out of the Restructuring Act was an obligation for the Internal Revenue Service to produce its own study on complexity. What is going on with tax law complexity? How does that affect individuals and businesses? How does that affect their capacity to comply with the law? Well, the IRS produced one complexity study. Remember, they're supposed to produce one every year. One complexity study they produced in 2000, or in 2002, and they haven't produced another one since. So the tax law is so complex, they don't even bother to study the complexity, even though there's an affirmative obligation under law to do it. All right, complexity, and here's the problem. Here's the problem that we're faced with right now. The Internal Revenue Code consists of more than 4 million words that were changed more than 6,000 times just since 2001 alone. In 2008, there were about 500 or 600 changes to the tax code. We have a situation right now where the Tax Cuts and Jobs Act that was passed in 2017, took effect January of 2018, the so-called Trump tax law, is all temporary. Do you realize that? Every provision, 60 or 70 provisions in the Tax Cuts and Jobs Act are all temporary. They will all expire at the end of 2025. So the question is, what happens with tax policy in the next year and a half? Well, if Biden is reelected president and nothing happens in Congress, and I mean nothing happens in Congress, all those provisions will expire. And we will have massive tax law changes whether we like it or not, just by virtue of inertia that's going on in Congress right now. We have a problem here with in 1992. In 1992, I wrote a book called How to Get Tax Amnesty. That book has since been rewritten 9 different times. That book was written on the heels of former IRS Commissioner Shirley Peterson making about 7 or 8 specific changes to the manner in which the IRS enforces the law. And those changes were very, very beneficial to taxpayers in the sense that they allowed people to work with the IRS to negotiate settlements on tax debts they couldn't pay. And Peterson made a statement which was remarkable. She said, you know, when you can't get blood out of a turnip, and when you're dealing with turnips, you're better off cutting your losses and moving on. That was a statement she made in the United States Congress. And that was the comment she made introducing these 8 specific changes that she made that led to my book, How to Get Tax Amnesty, right? So I took her comments and I turned it into a book, and here's how you deal with the IRS. This is the way you resolve your problems. That book created the tax resolution industry as we know it today. There was no tax resolution industry before that period. There was a couple of handfuls of us in the country, you know, that were doing this tax litigation work and tax resolution work. But I'm telling you, you could count them on 2 hands, the number of guys in the country that were doing this work. Until that book was released, it created an entire industry. But here's the other thing she said to Congress that is profound. And I repeat this over and over again. We're talking about 1992, she made this comment in front of Congress. She said the vast majority, and this is a quote now, the vast majority of what we call non-compliance with the tax law is not non-compliance at all, it's misunderstanding. People don't know what they're supposed to do. People don't understand what the rules are, and because they don't understand what the rules are, they get behind, they get delinquent, and we think they're tax cheaters, we think they're recalcitrant, we think they're scofflaws, and that's not at all what's going on. People don't wake up in the morning and say to themselves, how can I piss off the IRS today? I know, I'll stop filing my taxes and stop paying my taxes. That'll teach them. People don't do that. People get behind on their taxes, generally speaking, through no fault of their own, and one of the reasons this happens is because of complexity. And remember, Shirley Peterson made this statement in 1992. 10 years later, 2002, we're on the threshold of 6,000 tax law changes. And if you think, as she thinks it was bad then, I don't know if she's even still alive anymore. I don't know that. It doesn't matter. But the point is that she would not recognize the tax code today. I'm sure of that, because of the changes and the sheer volume and the scope of what's going on. And it's not just the volume, it's the understanding and the complexity of the code. You know, former IRS Commissioner, Douglas, what's his last name? It'll come to me. It doesn't matter. He made a statement to Congress that says this is about probably 2008. He was George W. Bush's IRS Commissioner. He made the statement that our tax code is now passed from complexity into perplexity because of the confusing nature of the language. When two people of reasonable intelligence can read a particular provision of the tax code and come away with two completely different understandings as to what it says, or no understanding at all, that is a fundamental violation of your right to due process of law. A fundamental right to due process of law is that you have the right to know what the law requires of you, and you have the right to know what you have to do to comply. And in this context, the Internal Revenue Code and the state tax codes that follow it are fundamentally flawed. Simplicity has got to be a key element of what is going on on the table here when we're talking about tax reform. The next thing on my list, number 2 on my list, is invasiveness. Citizens have a responsibility to pay the taxes they owe in full and on time. We would all recognize that. Agree? Say yes. Yes, we recognize that. Government has a responsibility to collect the tax in the least invasive manner. All right? To collect the tax without grinding people into powder in the process. That's government's responsibility. Not the most invasive manner. The system we have now is the most invasive that it can possibly be. First of all, we got an income tax system. So that means the tax base is income, or what we would call productivity, right? Wages, capital gains, dividends, distributions, rent receipts, all of these types of things that produce an accession to wealth. That's really what the definition of income is. Any accession to wealth is taxable as income. All right? A little tax law lesson here. You're walking down the street, you find a $20 bill on the street, you pick it up. Who picks it up? Raise your hand, you all pick it up. You see a $20 bill on the street, you're picking it up, don't tell me you're not. You reach down, you pick it up, you say, oh, look at that $20 bill. You might look around. If you're an honest person, you might look around. Nobody's here. I'm putting it in my pocket. Finders, keepers, right? Did you have income? Is that income? Yes. And it's taxable. And you better put it on your tax return and report it. Or you're going to jail. Oh, you're not going to jail. You're not going to jail. The point is that's an accession to wealth. That's part of the income tax base. Now, if we're going to have an income tax-based system, we have to have a government that knows everything about you. What you do, where you go, what you do, how you do it, who you do it with, the extent to which you gain from your activities with individuals. This is what is needed to know by the government in order to enforce an income tax. The Internal Revenue Service screws itself into the ground every single year, coming up with new ways to track the economic activity of the citizens of this country. All right, we are to the point now where there's billions, with a B, billions of information returns, W-2s, 1099s, that are filed with the federal government every year. We're up to about 3 billion information returns, 3.5 billion. And every single year that goes by, the IRS comes up with new ways to create more reporting requirements that Congress passes into law that are then heaped on the backs of businesses and third parties so that you have to report every single transaction with every single person you're ever engaged in. Because otherwise you can't tax the base. You can't tax the base unless you know everything. The IRS has got trillions of bits of information that are flowing in to the system every year, and they're spending hundreds of millions of dollars with private contractors developing computers to sort this stuff out, to categorize it, to analyze it, to evaluate it, to take action based on it. They are working on systems that will give them on-time access to every private and public database in the country, specifically so they know what you're doing, when you're doing it, who you're doing it with, and how you're doing it. That's the only way to enforce an income tax system, friends. Unless the government is ubiquitous, they have no idea that you found that $20 on the street last week and stashed it in your underwear drawer. They don't know that. And they need to know that, and they want to know that. And they want a tax law that gives them the power to know that so they can enforce this. All right? In addition to that, we've got compliance obligations that are heaped on individuals. You've got the responsibility to make and keep records, to file the tax returns, to pay the taxes, and when you don't pay the taxes, you are a victim of tax enforcement. All right? That means wage levies, bank levies, property seizures, and tax liens. And every single year, the IRS issues millions of wage levies and tax liens and hundreds of thousands of property seizures, depending on the situation. It ebbs and flows. But these hundreds of thousands, I say millions of people, are suffering the invasiveness in the form of enforced tax collection. Enforced tax collection is a serious burden, and we have to have a system that does not rely on, or does not have to resort to, I should say, doesn't have to resort to enforced collection with wage levies, bank levies, property seizures, and tax liens in order to collect the revenue. All right, we need a system that does not do that. So we've got to have a system that's non-invasive. Non-invasive. Number 3 on my list is efficiency. The system has to be efficient. Not only do we want to collect the revenue in the least invasive manner, we want to collect the revenue in the most efficient manner. Now, the IRS will tell you, and they will do it with a great sense of pride, and they're serious, that they are the most efficient government agency perhaps in the world, certainly in the country. And the reason they say that is because for every $100 of revenue they collect, they will tell you that it only costs them 50 cents to collect it. That's a pretty good return on investment. Invest 50 cents, get back $100. Who wouldn't do that all day long, right? That's what they will tell us. And if you just simply take the IRS's budget and compare it with the amount of money that's collected by the IRS, that's paid into the federal government, you would have to agree, well, yeah, that's pretty efficient, no doubt about that. The problem is this, friends. About 2/3 of every dollar that's collected by the IRS is not collected by the IRS. About 2/3 of every dollar that's paid into the federal system, state systems as well, is collected by employers through wage withholding on their workers. The employers have the affirmative obligation to withhold from the worker's paycheck their federal income taxes, their state income taxes, their Social Security taxes, their Medicare taxes, and pay it to the IRS. Businesses have the obligation to make these payroll tax deposits on an ongoing basis. Depending on the volume of your payroll, you might have to do it quarterly, you might have to do it monthly, you might have to do it bi-weekly. It depends on the volume of revenue that you're dealing with. And then the corporation, the business, doesn't have to be a corporation, the business has to file 4 employment tax returns, 4 941 forms once a quarter over the course of the year, 1 940 form for the unemployment tax. So the businesses, then they have to file the W-2s, the W-3s. All right, this is what's contributing to the billions of information returns that are filed with the IRS every year. So when we talk about the efficiency of the IRS, nobody except me ever talks about the burden that's put on businesses to comply with the tax law, to make the to do the IRS's job for them. It's businesses that are doing the job for the Internal Revenue Service, friends. That is the problem here that we're dealing with. Now, in addition to that, we have a tax system that's collected, or a tax, we got a revenue, the revenue under our tax system is collected from about 270 million collection points. Now, what do I mean by collection points? I mean, I'm talking about the point at which the IRS grabs the money. Well, what do I mean by that? There's about 160 million individual income tax returns that are filed every year. That number goes up. Be roughly 162 million in this last filing season, roughly. Another 105 or so million business tax returns, these 940s, 941s that I just talked about, those are the collection points. So we got a system with 270 million collection points. How is that efficient? How is it efficient for the IRS to go in literally in 270 million directions to get the money? That's not efficiency, friends. That's insanity. Whereas, look at the number of collection points under a sales tax system. The number of collection points under a sales tax system is remarkably less because the business collects the revenue at the point of purchase. The business pays the revenue to the state or the federal government. And now we've got a remarkably smaller body of collection points that we're dealing with. You know, roughly 85% of the people in America are wage earners. Roughly 15% of the taxpayers are businesses. So right away, or right off the bat, we're reducing the collection points by about 85%. That is a remarkable reduction in the number of collection points. Now, here's the other thing that's never discussed, rarely discussed. I shouldn't say never, because the National Taxpayer Advocate took a look at this a while back. And she talked about not just the processes of businesses complying with the law and individuals complying with the law, which I just touched on here a minute ago, with the record keeping and the return filing and all these hoops that have to be jumped through to comply with this. But we also have the cost of compliance, right? What is the cost of compliance? And the National Taxpayer Advocate took a look at this and added up the literally the millions and millions of hours that individuals and businesses spend making records and keeping records and preparing their tax returns and so on. And there was literally tens of millions of hours associated with this into the billions of dollars of cost. Well, there was a study that was done on this a long time ago, and we did the analysis in the book. How to Fire the IRS, that when you take into account all of the time and effort and energy that businesses and individuals have to spend in tax compliance, that the compliance burden on individuals, the compliance burden on the public, I'm going to break this down between individuals and businesses, the compliance burden on the public is about 65%, which means for every dollar you pay in taxes, it costs you another 65 cents to get it there. Now, friends, to be sure, this burden is disproportionately loaded on businesses because individuals that are filing a short form don't have a 65% tax compliance burden, all right? It's not costing them 65 cents out of every dollar they pay in taxes to have a short form filed based on their W-2 form. It's just not true, all right? However, the burden is disproportionately loaded on businesses who have the responsibility, especially those with employees, to file the 4941s, the 1940, the 1120s, the business tax returns, 1120, 1120S, 1065, whatever it might be, plus the W-2s and W-3s, plus all the 1099s. Remember, there's billions of these information returns that are filed with the government every year. Who's doing it? Businesses are doing it. And this is where the cost comes into play. And it's a tremendously expensive compliance cost. Government has to keep in mind, and it has to be on the table in full view, what the compliance costs are to businesses to jump through the hoops that government creates for them to jump through. We have to stop the process of putting these affirmative duties on the shoulders of businesses who incur costs to comply with these responsibilities. I said at the beginning of my remarks, the GAO study that was done 25 plus years ago that identified as many as 200 specific affirmative obligations that were put on the shoulders of businesses to comply with the law. That was 25 years ago. That was pre-healthcare, by the way. All right, so now how has it changed? Now how has it changed? In the year 2000 or 2001, I did a study that was based on the Minnesota income tax system. And my analysis of the Minnesota income tax system based on these 10 principles came to specific conclusions about what would happen to the efficiency of the state of Minnesota under a broad-based sales tax system with the abolition of the state corporate and income tax. All right, and what I came up with, and remember, this is 2000, we're talking 25 years ago now, an 82% reduction in the number of collection points, Annual savings of at least almost $5 million in return processing costs. It's got to be 10 times that now. An 88% reduction in the number of taxpayer questions. A reduction of 63% in the state tax return filing obligation of the average Minnesota business. An overall reduction in the state's administrative costs of about $38 million. That would have been the benefit in cost reduction to the state of Minnesota by abolishing its state income tax system. The state of Minnesota is a companion income tax system with the federal system. So whenever the federal law gets passed, the state of Minnesota basically just piggybacks themselves right on it, unless they specifically exempt themselves from this provision or that provision, which they do from time to time, which only makes Minnesota's law more complex, right? Because, okay, we're going to zig here, you zag here, we're going to zig there, and, the zigging and zagging, of course, has got people pulling their hair out. And the state of Nebraska does the same thing. You piggyback on the federal system the same way. And maybe you follow their laws and maybe you don't, and maybe they zig and maybe you zag, but all it does is create additional confusion for people. We've got to abolish the income tax and all of the inefficiency that goes along with the collection process. That has to happen. Number 4 on my list is stability. The law should be stable from generation to generation. People not only have a right to know what the law is, friends, but they have the right to know that what the law is today is going to be tomorrow, is going to be next year. I want you to think of something that can happen in the event of, in the affairs of a person's life that don't have tax consequences. Let's think about this. You get married or divorced, tax consequences. You buy a business or sell a business, tax consequences. You have a baby born into your family or a child leaves to go to school, tax consequences. You buy a house or sell a house, tax consequences. You start up a retirement fund or you start drawing from a retirement fund, tax consequences. Name something that doesn't have tax consequences that you can do in your life. You can't. You can't. Every aspect of your private life is touched by federal and state tax laws, and yet those laws are so unstable that we can't know tomorrow, we can't know today what the law is going to be tomorrow. Whatever the law is today, it might not be tomorrow. Might be more, might be less, might be soup, might be nuts. We have no clue. We have no way to know. And every single year, Congress convenes, the state legislators convene, and what is the first thing out of their mouth? We've got to change the tax code. We got to tweak this. We got to fix that. Those rich people pay no taxes. We got to fix that. Which is something we'll discuss in a little while here. The fact of the matter is, friends, during the 1980s, we saw about 3 major tax acts that were passed through that entire decade. Started out in 1982 with the Tax Equity and Fiscal Responsibility Act. 1986 was the Tax Reform Act, that massive thing that changed hundreds and hundreds of code sections. That was our first step toward a flat tax system where Ronald Reagan reduced the tax rates from 8 at the time down to 3, and they were trying to flatten the system out. And that was the track they were on. Well, the ink wasn't dry on that thing before they started changing it again. But 3 major tax acts in 1993 in the 1980s over the course of about 10 years. In the 1990s, we saw major tax law changes in 96, 97, and 98 that changed more than 750 code sections and subsections in the 1990s. And Congress was just getting warmed up. Starting in 2001, as I said already, the tax law has been changed more than 6,000 times. And that doesn't even include all of the COVID changes that occurred in 2001, 2001, 2002, and the tax cuts and the Tax Cuts and Jobs Act, which took effect in 2018. It doesn't even include all that stuff. And as I said already, those things are all set to expire the end of 2025. So we have nothing but tax law changes going on and on and on. We have expiring provisions in the tax code. We have temporary provisions. We have phase-ins. As I said, this Tax Cuts and Jobs Act is about 70 different provisions that are set to expire at the end of 2025. It is impossible for you to plan your affairs in any sort of reasonable manner when this tax code is changing constantly. We need a stable system because people have a constitutional right to due process of law, and that involves the right to know what the law requires of you so that you can comply. And we have no way to know that when it's changing constantly over and over and over again. In 2005, the President's Advisory Panel the President's Advisory Panel on Tax Reform made the following observation about these temporary provisions, talking about phase-ins, phase-outs, temporary provisions, expiring provisions, etc. They're a nuisance at best and a negative force at worst in the daily economic lives of American families and businesses. The tax system is both unstable and unpredictable. The frequent changes to the tax code, which often add to or undo previous policies, as well as the enactment of temporary provisions, result in uncertainty for businesses and families. This volatility is harmful to the economy and creates additional compliance costs for individuals and businesses. We need a stable system, friends. We need a stable system so that people can know what the law requires of them. Compare your state's income tax changes, the frequency of income tax changes, with the frequency of your sales tax changes. In the state of Minnesota, the state income tax came into being in about 1963. Income tax came much later, but the sales tax came in 1963. You can count on about one hand the number of changes that were made to the sales tax system compared to the income tax system, which is being changed constantly. Stability leads to complexity. Complexity leads to confusion. Confusion means increased compliance costs, and it is bad policy to have unstable taxes. And the first cousin to a stable system is a visible system. And that brings me to the next point on my list. Number 5, visibility. Visibility. The tax that people are paying has to be readily apparent to them. People need to know what the cost of government is. I'm in the tax litigation business. I deal with people all the time in their tax problems or financial problems. You're a tax pro, you're gonna dig this. Client comes in the door, we start talking about their situation. I want to know how much they paid in taxes last year. How much you pay in taxes last year? Oh, I didn't pay anything, I got a refund. I didn't pay anything, I got a refund. Really? Really, how much was your refund? $1,000, man. Free money from the government. I got $1,000 back. Let me look at your W-2 form. The W-2 says you paid $5,000 through wage withholding. You're telling me you got a $1,000 refund. Let me ask you again. How much did you pay in taxes last year? Oh, yeah, gee, I guess I paid $4,000. Yeah, I guess you did. People have no idea what they're paying in taxes because why? They aren't paying the taxes. The money is being sucked out of their paycheck. The only people who know what they're paying in taxes are small business owners that are writing the doggone checks. 85% of the people in the United States file 1040 forms, and the vast majority of those people get tax refunds. Let me rephrase that. 85% of the people who file 1040 forms get tax refunds. Because the vast majority of those people are employees. All right, I've been self-employed my entire adult life. 45 years in this business. You know how many tax refunds I ever got? Maybe one. Maybe one. You're writing a check at the end of the year. You're writing a check at the end of the year. People don't know what they're paying in taxes because they're not writing the checks. People think in terms of, and you're going to dig this, people think in terms of what? Net pay. They don't ever think in terms of gross pay. They don't understand what the withholding system is. I remember my son came home from work when he had his first job. He was about 16. He comes home from work. He says, Dad, who the hell is this FICA guy and why is he getting all my money? What's going on here? Look at that. I said, welcome to the world, bro. Yeah. It didn't take him long to stop voting for Democrats. Here's my point. Here's my point. The government can blame other factors, other alleged culprits or demons when the tax burden, when the cost of living is going up. They can blame big tobacco or big pharma or big oil. They can blame big whoever. When the fact of the matter, it's big government that's responsible for increased prices. All right. Now here's the other thing that we got to keep in mind. Here's the other thing we got to keep in mind. Hidden taxes are easy to raise because people don't see it. And that's why the government gets away with blaming other people for the increased cost, because people don't see what the cost is when it's withheld from their paycheck. The withholding system in our federal tax law started in about 1942. The Victory Tax Act was passed in 1941. That was a World War II funding measure. Of course, the income tax law came into being in what year? Class? Anyone? Class? 1913 with the passage of what amendment? Class? Anyone? Class? The 16th Amendment. The 16th Amendment. Say again? It started, the brackets were 1% on $10,000. You know what $10,000 was in 1913? That's about 300 grand today. All right, so nobody paid this tax. The top bracket was 6% on over $500,000 in 1913. That's how the bracket started out. So virtually nobody paid this income tax until 1941, when the Victory Tax Act was passed. We needed the money to finance the war. Well, the problem was American people were not accustomed to writing a check to the federal government. Nobody ever saved the money. So we had this massive level of tax delinquencies that were going on in 1941 into 1942. They amended the law in 1942. A guy named Beardsley Rummel was the Secretary of Treasury. Household word, I know. Household name, everybody knows. Everybody knows Beardsley Rummel. This is what happens when you live in Minnesota and it's 40 below in January. You read this crap. Beardsley Rummel was the Treasury Secretary. Now, Beardsley Rummel came from Macy's department store. He was the finance brains behind Macy's department store. And he recognized that people will pay any amount for goods and services if they could pay what? Overtime. They have to pay overtime. Anybody here old enough to remember layaway? Right? You put something on layaway, you go in once a week or once a month, drop down $20 after a month, or after 2-3 months, you got your item, right? Layaway. We don't have that anymore. Now we got Visa cards. Beardsley Rummel was the brains behind the withholding system. What we got to do is get these people paying their taxes every week or every month with their paychecks. Then we won't have the delinquency, and we'll have the money. When you look at a chart of federal spending from 1789, when the United States became a nation as we know it today, 1789 through today, you'll see small spikes during periods of war between 1789 and 1942. And in 1942, you see a massive spike. Now you say, well, World War II, Dan, it cost some fortune. Yes, it did. But the increase in spending never, ever, ever, ever turned around. Ever. The federal budget today, who knows what the federal budget today is? We Googled it here a few minutes ago.
There is no budget. Deficit's 1.9
trillion.
7.3 trillion they're proposing to spend for 2025. $7.3 trillion. And they're getting away with it because people don't know what they're spending. They don't see it coming out of their paychecks. Now, the people are feeling the pain now because of gas prices, because of grocery prices, because of the inflation that we've seen in the last 2.5, 3 years. They're screaming now, but all the government wants to do is raise taxes even more. State of California wants to increase their gasoline tax to $2.50 a gallon. At the worst time, at the worst possible time. And who do you think is going to get blamed for that? Big government, big oil, big pharma, big this, big that, when the problem is big government. We need a visible tax system So the burdens of taxation are apparent to everybody. People don't know what this government is costing them, and we need to know that. Number 6 on my list. I'm up to number 6. How am I doing on time?
Neutrality.
Say again? Neutrality is number 6. Taxes cannot fall more heavily on one group of individuals or one industry at the expense of another. Taxes have to be neutral in the marketplace. They have to be neutral. Right? I've been asked 1,000 times over the course of the years, why are the tax laws so complicated? Dan, why are they so complicated? Do our tax laws have to be this complicated? And the answer is what? No, of course not. They don't have to be this complicated. They are complicated because the Congress and the states use the tax code for something other than what it should be used for. As far as I'm concerned, there's only one legitimate purpose for tax laws, and that's to raise revenue. We'll get into this a little bit more detail as we go on here. There's actually a couple of different things. Article 1, Section A of the United States Constitution gives the Congress the power to use the taxing authority for 3 things. To provide for the debts of the nation, to provide for the national defense, and to provide for general welfare. We'll talk about that in a minute. But so as far as I'm concerned, those are the only legitimate functions of raising revenue. But that's not what Congress does. That's not what your state government does. They use the tax laws to provide social benefits. Right? They use the tax laws to punish one segment of society to the benefit of another, because they perceive that this segment of society needs some help at the expense of that segment of society. Congress and state governments are using the tax laws to institute somebody's idea of social justice. Well, the problem with that is the definition of social justice changes every 2 years. No matter who's in charge, no matter what's coming down the pike, we have a different definition of social justice. All right, selectively targeting industries for tax breaks or tax penalties is an illegitimate use of the taxing power of the United States. All right, this was suggested, but not suggested. It was determined by the Supreme Court years and years ago. And in 1874, a case was before the Supreme Court on the question of using the power of government to essentially engage in transfer payments. We know what a transfer payment is: taking money from one person and giving it to another. All right, we're not talking about paying the debts of the nation. We're not talking about providing for the national defense. We're not talking about the general welfare. We'll talk about general welfare in a minute. But I'm talking about transfer payments. Take money from somebody who earned it legally and peacefully and give it to somebody who did not. These are transfer payments. All right, and the Supreme Court said this: to lay with the hand and power of government on the property of one citizen, and with the other hand to bestow it upon favored individuals to aid private enterprises and build up private fortunes, is nonetheless a robbery, because it is done under the forms of law and is called taxation. All right, Frederick Bastiat, the great French jurist and philosopher and economist, called it legal plunder, to use the power of the law to take from people that which they have earned legally and peacefully and give it to somebody else who hasn't, under whatever cause you might name, is legal plunder. Using the power of law to do what you would be arrested and go to jail for if you did on your own. Robin Hood was nevertheless a criminal, no matter how earnest his intentions were. He was nevertheless a criminal. Let's keep that in mind. And this is what's going on with our tax code, is we are using this tax code to provide benefits to people at the expense of others, and that is not a legitimate use of the code. The tax code's got to be neutral. It's got to be neutral. You see, here's the thing about taxes. Well, we'll get to this right now. Number 7 on the list. Is economic growth. Taxes should not impede investment. Taxes must not impede investment in economic growth. All right, let me start with a basic here. All forms of taxation cause distortions in the marketplace. What is a distortion? What do I mean by that? A distortion is a force that causes you to do something you might not otherwise do, or prevents you from doing something that you would otherwise be disposed to do. That's a distortion. All right? We can say it another way. What you tax, you get less of. What you subsidize, you get more of. If you tax savings and investment and productivity, which is what our income tax system taxes, you get less savings, productivity, and investment. All right? When you subsidize people to stay home and not work, what are they going to do? They're going to stay home and not work. We saw this with COVID. The double whammy with COVID is people across the United States were trained to stay home and not work, and that's exactly what they did. Even coming out of COVID, even when the government, when the local governments, state and local governments released their shutdown orders, people stayed at home because why not get the free money? Why not get the free money? What you tax, you get less of. What you subsidize, you get more of. All right? When you tax employment, you tax wages, you tax productivity, you get less of those vital things. And these are the things we need to grow an economic system, to provide a stable system that will provide opportunity to all members of the society. Only a strong and vibrant economy provides opportunities for every member of the society. Only a strong and vibrant economy allows people to venture out into the marketplace, start a business based on their ideas, based on their creativity, and based on their drive to produce something out of nothing. Governments don't produce, friends. Let's get that through our heads. Governments do not create wealth. They transfer wealth. They take it from producers and they give it to non-producers. Or, even to the extent that there's legitimate functions of government, they take it out of the marketplace and they put it into the government realm. It's not the production of wealth. This is why socialist economies fail. Socialist economies do not produce wealth. They transfer wealth. All right, we have a free market system, what's left of it, a free market system. And in order to sustain that free market system, we need a tax system that promotes economic growth. The current corporate income tax rate right now is about 21%. If the Tax Cuts and Jobs Act expires, it'll go to 35, back to where it was in 2017. What should the corporate tax rate be, friends?
0.
It should be 0. Well, I say that, oh my God, 0. Oh, how can you know 0? Corporations don't pay taxes. All right, let's wrap our heads around this economic reality. Corporations don't pay taxes. People pay taxes. Corporations are a conglomeration, consortium of people that fall into one of three categories. The owners, called the shareholders. The employees, called employees. And the customers. Those are the three categories of people that make up a corporation. When you impose taxes on a corporation, friends, the corporation doesn't pay the tax. The people do in one of three ways, and generally it's a combination of all three of them. The owners pay the tax in the form of reduced profits. The employees pay the tax in the form of reduced wages or benefits or fewer employees or new employees not hired, right? Reduction of the workforce in some level. And customers pay the tax in the form of what? Higher prices. Higher prices. Under no circumstances, under no model, did the corporation pay the tax. People do. And that's why corporations should not be taxed at all. We want an environment that encourages investment, that encourages productivity, that encourages employment. If we lift the burden of taxation off the shoulders of these, income taxation off the shoulders of these businesses, then they have more resources available to invest in tools and equipment, in inventory, in people. And don't tell me they won't do it. I get this comment all the way, well, corporations, they're just going to keep the money. Well, let's say they do that. Let's say the corporation keeps the money. Well, first of all, it's fundamentally not true. I mean, we saw that with the Tax Cuts and Jobs Act when the corporate rate went from 35% down to 21%. How many hundreds of thousands of employees were hired during that 2-year period following that act? How many millions or arguably billions of dollars worth of buildings were built by corporations in the United States after the passage of that act? I remember writing about that over and over and over again. During 2018, it didn't take long. 2018 and 2019, we were seeing it all over the place. This company's hiring 200,000 people. That company's hiring 100,000 people. This company's building a building here, and that company's building a building there. It was going on everywhere. But even if they didn't, even if they didn't do that. Well, first of all, let's step back and let's argue about this nonsense for a minute. Why do they do that? Why? Businesses are in a dogfight for market share, are they not? Say yes. Yes, of course they are. They want to build their businesses. The businesses that aren't growing are what? Dying. They're dying. So businesses need to innovate. They need to develop. They need to create. They need to have talent. They need these people to get their market share going and up and keep it vital. They need that, and they will do that when they've got the resources available to do it. The bigger question is, where is the money more valuable? In the hands of the business or in the hands of the government? Business. Of course it is. Of course it is, because there have been economic studies that have been done over and over and over again. I talk about them in my 10 principles paper, that show that for every dollar you take out of the marketplace, it's not just taking a dollar out of the marketplace. There's residual negative impacts on taking the dollar out of the marketplace. I could take my dollar and invest it, turn it into $3 or $4 or $5 and hire a worker to help me continue to do that, right? So the negative effects of taking the dollar out of the marketplace cascade. And so ultimately over time you take a dollar out of the marketplace and you've suppressed $2.50 of productivity over time. This is the other problem with a model that does not promote economic growth. The founders specifically rejected an income tax system in favor of broad-based excise taxes for the very reasons that I'm talking about. Income taxes punish growth and productivity. This is the very engine we need to fuel to create a stable economic environment and one that is providing opportunities on an ongoing basis. Excise taxes don't do that. Excise taxes don't do that. In Alexander Hamilton's treatise that he wrote to President, what's that guy, that first president, what's his name? Good. That he wrote to Washington. How many cabinet members were there under George Washington's presidency? Class, anyone class?
3.
Two of them. Jefferson and Hamilton. They got the job done. Why do we need 38 of them now? I don't know. That's another discussion. They were talking about building a revenue stream for the newly created federal government. It was not a national government, it was a federal government. There's a difference. Anyway, Hamilton says, taxing the articles of our own growth and manufacture are more prejudicial to economic growth than excise taxes. The American government was funded with excise taxes and import duties right up until the Civil War, when the first Income Tax Act was passed. To fund the Civil War, was declared unconstitutional in 1894. It wasn't until 1913 then that we had the permanent income tax that we know today. The government was funded with excise taxes and import duties, precisely because they are the least invasive, they create the least amount of distortion, they impact the economy in the least possible way. Remember, I already said that all taxes create distortions. All of them do. Which is why when you're thinking about adopting a tax system, you've got to have the base spread as wide as you can so that people don't have the power to say, well, I'm just not going to buy that anymore. I'm going to go this direction instead of that direction, and this company suffers and that one grows. Right? So that's why it's got to be broad-based. And that's why it has the least amount of negative impact on the marketplace. And that gets me to my point number 8. It's amazing how these things lace together. Tax system has to be broad-based. What is a tax base? When I use the word tax base, phrase tax base, what am I talking about? I'm talking about the body of economic activity that we are imposing the tax upon. The body of economic activity that makes up our tax base right now is what? Income, earning income. That's the base. When we're talking about a consumption tax or a retail sales tax, the base is consumption at the point of purchase. You do not raise rate. Another economic reality here. We're learning a little bit about economics today. Another economic reality is that you do not raise revenue by raising rates. You raise revenue by spreading the base. I'll prove it to you right now with one simple illustration. We have a graduated income tax system. Let's suppose we rewrite the tax law that says we're going to tax your income in excess of $10,000. Whatever income you earn in excess of $10,000 will be taxed at 100%. How many of you will earn $10,001 next year? Nobody will work for nothing, at least not voluntarily. So how much revenue will be raised when we increase the rate to 100%? How much will be raised? Zero. Zero will be raised. You don't raise revenue by raising rates. You raise revenue by spreading the base. So when we're talking about a consumption, now the problem with the base that we have today is we have a shrinking base. Fewer and fewer people are paying a greater share of the income tax, while a greater percentage of the people are paying little or nothing. And every year that goes by, it seems like some law comes out that is exempting this group and heaping more burdens on that group. And they get away with it with this demonstrable nonsense that says rich people pay no taxes. How many have heard the phrase, rich people pay no taxes? Raise your hand. Every hand should go up. You've all heard it. During an election cycle, you can't swing a dead cat without hitting somebody in the face that is telling us that rich people pay no taxes. It's true. You know it's true. The fact of the matter is rich people pay all of the taxes. Treasury Department numbers. I'm not talking about Republican numbers. I'm not talking about some podcaster working out of his mother's basement. Treasury Department numbers illustrate that today the top 1% of income earners pay 42% of all the income taxes paid. The top 1% pay 42% of all the income tax. How is that possible if rich people pay no taxes? The answer is it's not possible. The line that says rich people pay no taxes is fundamentally false, and it's done simply to inflame the passions and prejudices of the public against higher income people, precisely so they will support tax increases that filter down lower and lower and lower into the marketplace, if through no other means than by increased products and services in the marketplace, increased prices of products and services in the marketplace. Because remember, corporations don't pay taxes, people do. Right? So this is what's going on. What we are faced with here is what I call the Disney World syndrome. And here's the Disney World syndrome. My wife and I raised 4 kids. So there were 6 of us in the household. Now I want you to imagine, now these are, let's say we got teenagers, 12 years of age and under, right? There's about, about maybe plus or minus an 8-year spread between my oldest and youngest. So here's how the Disney World syndrome works. Every month, we have to put to a democratic vote at the dinner table this challenge. This is up for the voters every month. Do we pay the mortgage or do we go to Disney World? Put it to a democratic vote. How many times do you think the mortgage payment wins the vote? 0. It never wins. Because the 4 kids say, Disney World, Dad, it was fun last time, let's go again. Well, kids, we're in bankruptcy. Whoa, what do you mean bankruptcy? Let's go to Disney World. They don't know or care about the burdens that have to be borne when they're not carrying the load. All right, so not only do we have a shrinking portion of the population that's paying the tax burden, we've got a growing portion of the population that has no interest in keeping tax rates and tax burdens low. They continue to vote for benefits they don't have to pay for. And what happens is when you have a growing segment of the population that's voting for benefits that they don't have to pay for, there is no tax or economic model that you can think of that will support that over time. It is unsustainable. It's unsustainable. So we need to have a broad-based tax system on all consumption goods and services so that people can see what they're paying, it's visible, and so that everybody has skin in the game. I told you that people need to know what the cost of government is. People have to share in the cost of government because that gives them an interest in keeping the costs down. If people knew what this government was costing them, there would be a different attitude about whether they're willing to pay for it or not. This is why consumption taxes at the point of purchase is such a good idea. One of the reasons. Number 9 on my list is equality. Equality, well, there's a wild idea. Equality under the law. Who would have thought that in America we would have equality under the law?
It's our national law or our state law.
Is it? Abraham Lincoln. Anybody ever hear of Abraham Lincoln? You folks under 30 years of age, he was a president of our country. He was 16th president. Civil War. Lincoln said the crowning jewel, he made this argument in one of his many debates with that other guy, Douglas. What was his name? Douglas. Frederick Douglass. The crowning jewel of American liberty is the concept expressed in the Declaration of Independence that all men are created equal and are endowed by their Creator with certain inalienable rights, and among these are the rights to life, liberty, the pursuit of happiness. The crowning jewel is that all men are created equal. Men, red people, right? Men, red people. Not, the male versus the female. All males are equal, but not females. No, that's not what they meant. That's not what they meant. All people are created equal by the hand of the Creator. And they derive their rights from the Creator, not from government. But our income tax law is antithetical to that concept. People are treated differently under the income tax law specifically and only because of their economic status or social status. We've got 5 different filing classifications. Tax return filing classifications. Married filing jointly, single, married filing separately, and then a couple of others, right? It doesn't matter. There's 5 of them. Well, who can keep this crap straight anyway? I just make this stuff up as I go along. There's 5 different classifications and filing statuses and 5 different tax rates depending on your social status. Whether you're married, whether you're single, whether you're head of a household. All right, where's the equity in that? There's 6 different definitions of the word child under the Internal Revenue Code, depending on your economic status and your social status. 6 different definitions. There's 7 different tax brackets in the code, and they're all arbitrary, and they were arbitrary from day one. What is the economic, and what is the constitutional, and what is the moral basis for the various brackets in the Internal Revenue Code? 10%, 12%, 25%, 31%, 30%. What is the economic and moral basis for it? There isn't one. It's arbitrary. And I'll tell you, friends, any law that's based on arbitrary principles is unconstitutional per se because it's a violation of the essential element of due process. It's a violation. In 1913, they were debating in the Senate what the brackets were going to be for this new tax law that was created by the 13th Amendment. So now Congress has got the authority. Now we'll pass a law, right? And so they're debating what the brackets should be. And Porter McComber, was a senator from North Dakota at the time. Made a speech to the Senate. Said, Mr. President, it is quite evident that no 2 senators will agree upon the number of steps, brackets, in this sliding scale of this bill, and it is equally clear that no 2 of them will agree upon the ratio of rate for each particular step. Why? Because they're arbitrary. There's no basis for them. You might as well be throwing a dart at a wall, at a target that's got the brackets on it, with the bullseye being 100%, right? Let's aim for the 100% bracket. We'll raise all kinds of money if we just tax them 100%. All right? This is the problem. And even with the Tax Cuts and Jobs Act, even going back to 1986 when Ronald Reagan flattened the rates out to just 3 brackets, they were still arbitrary. There's no basis for the numbers. Where do the dollar amounts start and stop? Where do the percentages start and stop? Who gets to decide that? It's all done with buying and selling and trading in the halls of Congress. The tax code that we have now is based on invidious discrimination. It's not based on the concept that all men are created equal. It's driven by invidious discrimination. We're discriminating against people because of their economic status, because of our greed and our envy. We look at these rich people and say, oh, you SOB, you shouldn't be that rich. How dare you be that rich? I'm not that rich. This person over here, most people aren't that rich. Why should you be that rich? And so because we think arbitrarily, and without any moral or legal or constitutional authority, we think arbitrarily that you shouldn't be that rich. We use the power of government to take from you which you have lawfully and peacefully earned and give it to somebody else. And now we're not even doing it under the pretext of giving it to somebody else. We're doing it under the pretext of you're just too damn rich and that's that and the government needs the money. That's what we've resorted to now. That is not a system that's based on equality. That's a system that's based on invidious discrimination. There is no other area of our law, federal or state, where we would tolerate rules and procedures based on invidious discrimination. There is no other area where we would embrace that as a high-minded idea, yet that's exactly what we do in the halls of Congress and the state legislatures when it comes to tax reform. Oh, we gotta have a progressive tax system. We gotta tax these rich people. Where's the moral authority for it? It's theft. It's nothing but theft. That's what it is. Call it or color it however you want to. It is theft, friends. And there's no authority for it. Which brings me to number 10. Constitutionality. A tax system needs to be constitutional. Article 1, Section 8, I alluded to this earlier. Article 1, Section 8 of the Constitution gives Congress the authority to use its taxing power for 3 narrow purposes. 3 narrow purposes. Number 1, to pay the bills of the government. Right? We got to have offices. We got to have government workers doing various things. No argument. Pay the debts of the nation. Right? That's number 1. Pay the debts of the nation. Number 2, provide for the national defense. Anybody misunderstand that? Say no. No, that seems simple enough. Number 3, provide for the general welfare. And therein lies the confusion. What is the general welfare? Well, they would tell us today that welfare means welfare, i.e. government payments to people that are less well off. But the founders never would have used the word welfare to describe what are in fact government benefit programs, or what they would have termed government relief programs. Some of you are old enough to remember back to the 1960s and 50s that family that was on relief. They're on relief. They weren't on welfare. They were on relief. It wasn't until the latter part of the 1960s with Lyndon Johnson's War on Poverty that this stuff was turned into quote unquote welfare programs. Why did they change the word? Because relief isn't used in the Constitution. And there's no authority in the United States Constitution whatsoever to take money from one person and give it to another. However, if we call it welfare, we can argue that it's provided for under the General Welfare Clause. And as a matter of fact, that idea wasn't born in the 1960s, really. That idea came out of Franklin Roosevelt's 1930s Depression relief programs, where the Social Security program was born, by the way. The Social Security program was born, by the way. What most people don't understand is most of Franklin Roosevelt's relief programs were declared unconstitutional by the Supreme Court as they were being passed by Congress. They passed them. The courts declared them unconstitutional, and this happened over and over again until Roosevelt threatened to pack the court. He said, we'll just take the court from 9 members to 15. I'll put my own people on there, and everything will be constitutional. That's when the Supreme Court changed its mind. But up until that point, they were declaring these things unconstitutional. There was a case in 1933, United States versus Butler. The Supreme Court's talking about one of these programs. A tax in the general understanding of the term, and as used in the Constitution, signifies an exaction for the support of the government. The word has never been thought to connote the expropriation of money from one group for the benefit of another. There was no authority in the Constitution to use the taxing power for transfer payments for the physical support of a person or a group of people. The phrase general welfare means for the benefit, well-being, welfare meaning well-being of everybody. What does the word general mean? It means broad with no exceptions, right? General well-being. So for the benefit of the entire nation as a whole, the federal government could invest. A perfect example of that would be the interstate, did you say that? The interstate program. I was just about to spit it out. I was going to spit it out. The interstate program benefited every element of society. Did it not? Say yes. Yes, that's a general welfare spending program support that could legitimately be supported. But transfer payments from one group to another, there's no support for that. There's no support for that. It wasn't until 1937 that this general welfare term was twisted. In the case of Halvering versus Davis, was one of the Supreme Court decisions that came out during that period of time. In the Supreme Court case of Citizens Savings and Loan versus Topeka, the court labeled this practice robbery. Robbery. It's the process of taking money from one group of people who earned it and providing it to another. Now you say, well, aren't you in support of helping the poor? Isn't that the Christian thing to do? Of course it is. Of course it's the thing to do. You have an affirmative duty to help your neighbor. You as a Christian, if you're a Christian, have a responsibility to help those people around you that are less off. Where does it say in the Bible that we should use the power of government to do it? A lot of people run around saying, well, Dan, Jesus was a socialist, you know. He hated those rich people. Where in Scripture does Jesus ever say anything about using the power of government to force people to do the things that you should be doing as a condition of your heart? Where does it say that, Pastor? Nowhere. Nowhere does it say that. Jesus lived under the authority of the Roman government. Caligula was the emperor of Rome when Jesus walked the earth. Do you think that he was behind the idea of the Roman government slicing people up into pieces if they didn't pay taxes to support the poor? The Roman taxes didn't support the poor, friends. What did the Roman tax support? The emperor and the growth of the empire. That's what it supported. Armies across the world. Walls and forts on frontiers. That's what it supported. Now you made me lose my place. As long as we have a growing segment of the population voting for benefits that they never have to pay for, and a shrinking portion of the population that's asked to carry the load, there is no economic or tax model that you can think of that will support that. A retail sales tax on all consumption goods and services across the board, spread the base across the board, meets all of the 10 principles that I've just outlined for you. It solves the problems that we've identified here at both the federal and the state level. And you folks in Nebraska have an opportunity to make that happen. And I have to encourage you to support the folks that are working for that, the EPIC folks and the Founders View, the Nebraskans for the Founders View. are supporting this idea, and you've got friends in the legislature that are behind this, and so you got to give them your support. You might not have another chance. The end.
Well, thank you, Dan. No, that's, I think rather than worrying about cards and questions, the group is small enough. If you have specific questions, just stand up, speak loudly.
Let's do, yeah, go ahead. Stand up and speak loudly.
Hi, I was just curious about a couple of stats. If you overpay because you didn't follow the rules correctly, the IRS doesn't hold your hand and tell you you overpaid. Do you have any estimate how much or how many people overpay? And then also, how many people actually pay negative tax in that they get back more?
Yeah. The second question first. The Treasury data show that the bottom two quintiles, so 40%, those earning 40% of the income and under, are actually getting more money back, negative tax. All right, so the bottom 40% of income earners, negative tax, are getting more back. As far as the ratio of people that overpay taxes, I don't know what that number is. You're right, the IRS doesn't hold their hand. If the IRS looks at the return and says, oh, gee, they made a mistake, they don't necessarily tell you. The only way that would come to light is if you're actually audited, or if you sit down with a hotshot know-it-all tax pro who looks at your prior tax return and says, Leah, you messed all this up, let's file an amended return. But you can only amend your return for 3 years back. So if somebody made a mistake 5, 6, 7 years ago, that money's just gone. So, any other questions, you ma'am?
And when I'm doing tax returns, I'm actually calculating taxes. Call them alternative minimum tax. Don't really talk to my clients a lot about it, other than I'm looking at them. They're actually doing two returns in one. So that's another complicated issue that a lot of taxpayers don't know that we're looking at.
The vast majority of taxpayers don't know about the alternative minimum tax until somehow they jump into a tax bracket that's a little bit higher, which inflation often drives them into. So it's not like they're receiving more wealth. They get pushed into this bracket. And this is the ultimate response. I'm glad you brought that up. This is the ultimate response to the argument that rich people pay no taxes. There's a lot of reasons why rich people pay all the taxes. Number one reason on the list is the graduated income tax. The more you earn, the higher percentage of tax you pay. Not just paying more taxes, you're paying a greater percentage of your income in those top tax brackets. The highest bracket is 37%, 37.5%, right? Is that 37.5%? Right, that's the highest one. So that's remarkably different than somebody who's paying 10%, right? That's remarkably different. But the alternative minimum tax is a tax that kicks in at a certain level of income. When your income reaches that level, you are no longer able to claim the deductions, credits, exemptions, and so forth, these exotic loopholes that supposedly are available to rich people. You can't claim them when you're under the alternative minimum tax system. And as far as I'm concerned, the alternative minimum tax is an admission by the federal government that our tax system is broke. If we had a sound tax system to begin with, you wouldn't need an alternative minimum tax. People would pay what they pay based on the law, what it is. We wouldn't have two tax systems, and that's what the AMT is. ATM is where you get free money. AMT is where you pay it all in, you pay it all back. The alternative minimum tax is a secondary system that runs side by side with our primary tax system that rich people have to abide by. It's basically a flat tax, is what it is. The ATM is basically a flat tax. I'm glad you pointed that out.
Another thing I'll point out, so you talk about the employer's taxes. So they pay in all these employee taxes, right? Could you speak to it? I don't want to touch on off guard, but the penalties that are assessed. So if an employer fails to pay those payroll taxes, it could be an employee within their system that failed to do it. I've had medical staff, doctors. The penalty can be as high as 100% of that tax, that payroll tax. You've got to.
Yeah, you're not going to catch me off guard. It's called the trust fund recovery penalty. So if you got a business that fails, you got a business that's withholding money from its employees, That is considered when the business withholds the employees' income taxes and Social Security taxes. They're responsible to truthfully account for and pay over that money to the IRS within a certain period of time. If they don't do that, the business fails and that liability becomes uncollectible from the business. Even if it's not uncollectible from the business, if it's not being paid, then that trust is called the trust funds because it's held in trust. The law makes you a trustee on behalf of your employers in favor of the federal government. That's what the trust relationship is. And when that tax gets failed to be paid in, the amount of the trust taxes is assessable against the individual business owner to the tune of 100%. All right, so that's what she's talking about here. It's called the trust fund recovery penalty. I've litigated that many times over the years. But people think that because they've adopted a corporate structure that they're protected from the debts of the corporation. Well, I've got this corporate veil stretched over me. I've got this corporate veil or the LLC limited liability veil stretched over me. I don't have to worry about the debts of a failed business. Wrong. When it comes to employment taxes that are not paid, the IRS reaches right through that corporate veil or right through that LLC structure and attaches to the individuals. Now, you made up another point about other penalties. I was thinking in terms of other penalties. But the other penalties are egregious as well, because the IRS will assess penalties for failure to file these employment tax returns, failure to make deposits on time, failure to make deposits in full. The IRS will assess about 37 to 40 million penalties. Get this now, 37 to 40 million penalties against individuals and businesses in a given year. Two-thirds of those penalties are against businesses related to employment taxes. It's a huge problem. Will it make the state more attractive? Yes, it will. And will it draw people from other parts of the country to invest in the state? Yes, it will. There's no question that there'll be ongoing economic activity and property is bought and sold in these environments. There's no doubt about that. But you can only buy what's voluntarily for sale. To get to this gentleman's point, which you point out is, it's a valid concern, no doubt about that. But the fact of the matter is you still got to have a willing buyer and a willing seller. And if you have a willing seller and a willing buyer, both parties end up as beneficiaries to the transaction. Right? Both parties benefit. Let me illustrate to you. I have a lawnmower in the corner of my garage that I haven't used for 15 years. But I know it works, because every once in a while I pull the cord and it starts. But I don't use the lawnmower. It's in my garage. You have a small one. It's a push lawnmower, which is why I don't use it. But let's say you've got a small yard, small city-sized lot. You need a lawnmower. You come to me and you say, Dan, I see that lawnmower in the corner of your garage. Want to sell it? I say, sure, I'll sell it. How much you give me for it? We talk, we negotiate. I start the motor. You see the blade spinning. You say, I'll give you $50. I say, sold, $50. Who came out ahead on the sale? Did I come out ahead or did he come out ahead? What's the answer? We both did. Why? Why did we both come out ahead? Why? Because the lawnmower was more valuable to him than the $50, and the $50 was more valuable to me than the lawnmower. That's why we both came out ahead. It's what Adam Smith calls the miracle of the marketplace. When you have a willing buyer and a willing seller, both parties come out ahead. Both parties come out ahead. Now, when you have a party that's forced to sell because they can't pay their taxes, that's different. Now, that's what we call a distortion, because the tax burden is forcing this. It is absolutely economically true. The high taxes force the person into selling their property that they otherwise would not sell. How do you, I'm not a politician. I've never run for office. I'm never going to run for office because I'm unelectable. I'm unelectable. Jesus tells the story in Scripture, probably in Matthew somewhere. I can't spit the chapter and verse out at the moment. He talks about the wheat and the tares. He talks about the fact that the wheat seeds were sown in the field, and that as the field hand slept, the enemy came in and sowed weed seeds among the wheat, and the wheat grew up with the weeds, wheat and the tares. The wheat grew up alongside the weeds. And the farmhand came to the master and said, what are we doing? He says, well, just let them grow and we'll separate the wheat into the barns and the tares for burning. The key element of that scripture is Jesus says that while they slept, the enemy came and sowed the seeds among the wheat. We have good people have had their eye off the ball for so long that it allows the enemy to come in and sow seeds among the wheat, sow the weed seeds among the wheat, to create these problems like the 16th Amendment and the 16th Amendment and the Federal Reserve Act, which incidentally passed at the same time, same year, 1913. And this is what happened. Thomas Jefferson said the natural order of things is for government to encroach and liberty to recede. And that's why he said the price of freedom is eternal vigilance. And Reagan said that freedom is never more than a generation away from being extinguished. Never more than a generation away. We have a situation in the United States today, fast forward 100 years now, plus. About 70% of the kids in the United States under 30 years of age, people under 30 years of age, believe socialism is a better economic model than free markets. Now, you take that body of kids that believe socialism is a better model than free markets, you ask that same group of kids whether they believe in slavery, what will they tell you? To the person, what will they tell you? Oh no, slavery is immoral. Slavery is immoral. But that's essentially what a socialist economic model is. It's slavery. You've got a government institution telling you what you can do, when you can do it, how you can do it, what you're going to be paid to do it, if anything. And yet that model is beneficial to a free market where you have the liberty to make the choices that will best benefit you and your family. It's an irreconcilable conflict. And the answer to the question is ignorance. Ignorance. I don't know what else. Go ahead, Matt.